Welcome, traders, to the SPACs attack, baby. Let's get it started. What's going on, traders? How we doing? And welcome to the SPACs attack. My name is Mitch. I'm here with my sidekick, the brains of the show, Katje. You guys already know. This is the man right here. Hit the like down below. Hit the subscribe. We got a great show for you guys. You know, one of the things we do is we bring you the executives, we bring you the experts, and of course, we bring you the information. So one of the things that we need to get into is the headlines of the day. I know we have a great interview later on today. So Chris, if you want to go ahead and get started on the headlines, let's go ahead and let's take them back. Let's get right to it. All right, Chris, what's going on out there?
Yeah, so we've got some exciting headlines today before we get to our interview. So up first, we have QS, that's former SPAC. This is QuantumScape. So this company now, it hit over $100 yesterday, breaking the record for the year for a SPAC, which was held by Niccolo. So shares are now over $120 today and continuing to climb higher. This has been the hottest SPAC of the year, one that we will continue watching in that battery space going forward. Then up next, we have XL. So this is one we've been talking about for a while on the show. So they completed their merger yesterday, formerly known as PIC. Shares were up big yesterday going into that merger deal. The votes came in, it was approved. It now trades as XL. Looks like shares are down today on that deal. I am still long shares of XL here. We want to talk about LiDAR stocks here. So big news yesterday in the vehicle world. So Apple made an announcement, or actually they didn't make the announcement, but it was announced that Apple is working on electric vehicles. So we've had 4 LiDAR SPACs, announced this year. So it looks like Apple in those cars is going to use LiDAR. According to sources, it says that they're going to look outside for those LiDARs, but they also may, internally develop LiDAR units. So we're seeing LiDAR stocks trade higher. Remember that the iPhone 12 Pro and the iPad Pro models both feature LiDAR sensors. So Apple is experienced with LiDARs. They do believe in that technology, unlike Tesla, where Elon Musk has said, that he does not like LiDARs. So the two that I want to highlight today are VLDR and IPV. So VLDR is former SPAC, it's Velodyne. They're being seen as a possible winner from Apple as they kind of have the lead in the LiDAR industry. They have some large deals signed. So look for them possibly as a player there with Apple. Then the other one I want to bring up is IPV. So this is a SPAC merging with Ava, which is a LiDAR company started by 2 former Apple engineers. The company is backed by Porsche and Lockheed Martin. They're working on a 4D LiDAR. So obviously you hear started by 2 former Apple engineers. So they do have an existing relationship there. I'm seeing some patents circulate around Twitter that are possibly, shared between the company and Apple. So that's definitely something to watch. Shares of IPV are trading higher today. And that's one, that I definitely think could get a piece of this pie. And then I also want to highlight THBR, which is one that we talked about recently. They announced a deal merging with Indie Semiconductor, which is a play on autonomous cars. And they're also working on LiDAR as well. So that could be one to watch in that space with Apple now entering into electric vehicles and autonomous vehicles. DM, so shares of Desktop Metal. So this is one we talked about on the show after that deal went through. Shares dropped that first day after that merger was approved. I bought shares on the dip. We talked about how this could be a long-term winner in that 3D printing space for industrials and large items. Shares were up big yesterday and are moving higher today. So it looks like maybe that one is seeing some movement now. So if you did buy on the dip, we are now in the green on that one. I am still holding shares of DM going forward. We had 2 new deals announced this morning. So JIH is bringing Janus International public. This is the SPAC is Juniper Industrial Holdings. So this is one of the leading providers in cutting edge access control technologies and building product solutions for the self-storage and industrial sectors. So Juniper was founded by former Honeywell executives. So this is one to watch in that space. It's being done at a market cap of $1.4 billion. We'll try to get some more details on that one for tomorrow's show. And then we did have another deal announced today. So symbol CLA. This is another LiDAR SPAC deal. So the SPAC is Colonnade Acquisition Corp, and they are merging with Ouster. So digital LiDAR in industrial infrastructure, robotics, and automotives. So this is one to watch in that space. It's being done at a $1.9 billion valuation. And I did see on Twitter that there is a chart that I shared from Dan Johnson that compares the LiDAR SPACs. And it does show that Ouster is expecting revenue of $818 million in 2024, which is the highest of those 5 LiDAR SPACs. Velodyne leads the way for the next 4 years. But then by 2024, Ouster, according to projections, it looks like they would have the highest revenue. So that's definitely one worth watching. Want to talk about Longview Acquisition. So LGVW, this is the company bringing Butterfly Network public. So this SPAC is now flying higher today. Investors are taking note that Kathy Wood added to her position in ARC-G, the ARC ETF that's up over 200% year to date. So they added 263,000 shares yesterday. They now own over 1.2 million shares of LGVW. This is only the second SPAC this year that Kathy Wood has purchased, with IPOB slash now open being the other one. So Butterfly Network, portable ultrasound company. It's backed by Bill Gates and Bailey Gifford, who's a longtime Tesla investor and bull. They're trying to put ultrasound on a chip and creating more access to underserved areas of the world. They also have Butterfly IQ, which is the only ultrasound that can perform whole body imaging with a single handheld probe using semiconductor technology. They have the Butterfly IQ Plus, which has under a $2,000 price for membership. So right now, ultrasound is dominated by those large cart-based devices, which Butterfly Network is attempting to change. Their products have sold over 30,000 units. They have agreements in place with the largest 100 hospitals in the U.S. They have a working relationship with Taiwan Semiconductor for those chips. So I see this one being similar to the IPO of NanoX, NNOX, which has a portable X-ray solution. They had a very strong IPO. This is disruptive technology, a portable ultrasound. And now you have, so Fidelity also backs the company. So you have Bill Gates, Bailey Gifford, Fidelity, and now Kathy Wood. So some of the biggest names here are all invested in this company, which I think is a huge bullish sign. This is one I've talked about on the show before. I love it going forward for the long term. It did have that huge bounce today, so we will see kind of if it can keep that momentum going up. But this is one that should definitely be on your radar if it is not already. And then, so before we get to the interview, I do want to say that Friday we had 12 new SPACs that filed, and we also had 7 more SPACs filed yesterday. So tomorrow's show, we're going to take a look at some of those new SPACs to keep on your watch list, as some of those are from parties that have already launched SPACs that have been pretty successful overall. So obviously, when we talk large management teams, it's important to kind of look at some of the people who have experience with SPACs. So we'll be bringing you some to keep on your radar. So that is it for headlines today, Mitch.
Yeah, definitely. You guys know that Chris is the man with the brains here, bringing you the information, and we try hard to bring you the information that you guys want to see. So if there's any SPAC out there that you guys need some more coverage on or want to know some more information about, definitely put it in the comments below after the stream. We check them every single day so that we can know what you guys want to see. All right, so one of the things that you're hearing, all these new SPACs still coming. I'm really excited about 2021 and where we're going to be going in with these SPACs and the whole industry. I mean, if you really see, I mean, the trend is still going up. So essentially, you've been getting more and more SPACs to come out. So I'm going to be really interested to see if we can kind of break the 2020 record. Looking forward to some of the shows that we have planned next week. We want to bring you guys the best of 2020. We want to bring you some of these that are next to 10 and 11 so that you guys can plan. And then also we want to bring some of the ones that we're looking forward towards in 2021. All right, so I know we have a great interview. I'm super excited. As you guys know, me being a big sports fan and all, I'm really excited to bring on this next SPAC. Chris, go ahead and introduce so we could bring on our guests.
All right, guys, again, we bring you the exclusive CEO interviews on SPACs Attack. So our guest on today's show is Niccolo de Masi. He's the CEO of DMY Technology Group and also the chairman of GLUU Mobile. So DMY Technology has launched 3 SPACs, DMYT, DMYD, and DMYI, which is still being traded as units. DMYT is merging with Rush Street Interactive. DMYD is merging with Genius Sport. So welcome to the show, Mr. de Masi.
Pleasure to be here, gentlemen. Big fan.
Thank you for coming on. All right, Chris, I know that you got a lot of questions. I'm going to be back because I got some great ones. So I'll let you go ahead and nail some of these, and then I'll jump back in.
All right, awesome, Mitch. Yeah, so let's dive right in. So DMY Technology has launched 3 SPACs. So want to kind of go through an order here. So DMYT announced that they were merging with Rush Street Interactive. Rush Street has been dominant in the Illinois market. So I'm wondering if you could talk a little bit about the early results there in Illinois for that brand in the state.
Well, yeah, I mean, look, Rush Street Interactive is actually the #1 online casino company in nationwide. So if you look at Eilers and Krejcik, that we think has pretty good research, they've been very consistent in the last 2 or 3 quarters that we've been the #1 market share leader in online casino. We're probably number 3 or 4, depending on which state we're looking at from a sports betting perspective. But overall, we're posting really impressive results, right? So we announced the SPAC IPO transaction on July 27th. We've upgraded our results twice since then. We announced, really impressive Q3 results, operating break even or better, very low marketing spend, really compelling unit economics and revenue, obviously, in the high 70s, which bodes well as we think about momentum for Q4 and into next year. So Rush Street Interactive obviously has been an operationally excellent business. That's why we chose it to merge with. I've been in the gaming space, as you know, for the better part of 20 years in the public markets. I feel like I understand what it takes to make a great game company. And Rush Street Interactive has been a great online casino company from inception, frankly. We're the leader in almost every state that matters and the leader overall. We're the only player that has licenses in the big markets. And we are not only first to market everywhere that I think is relevant, but even when we're not first to market, we still outcompete the landscape into a leadership position. So we have our shareholder vote coming up next week on December 29th, and we're really excited about what next year has to bring for Rush Street. We're going to have more growth capital on the balance sheet than the company's ever had in its history, given that it got to IPO and only about $50 million of invested capital, and it will have over $230 million in the balance sheet, by the end of the year.
Awesome. So I kind of started my question talking about sports betting, and you went into the next question I had, iGaming. So iGaming is kind of seen as the higher growth area and provides better margins for these companies. So we talk a lot about sports betting, but can you kind of give us a summary of iGaming and why that may be more valuable in the long run to yourself and some of the competitors?
Oh, absolutely. I mean, I think casino is the granddaddy of all gaming, right? And I say that not only of sportsbook, but free to play casino as well. So we have the biggest lifetime values. We have the most profitable unit economics. I mean, a sportsbook, player might be worth $20, in its lifetime, whereas a casino player is worth $600, right? So it is forecast by Eilers & Krejcik to be double the size of the sportsbook business, the online casino business. So we feel like Rush Street is phenomenally well positioned. We have a team of veterans. We own our own tech stack. It means we can update our product faster than anybody else in the market. So we have an advantage in improving our product through continual iteration and continual experimentation. They have a single tech stack for both social casino through to the regulated, so we can get into markets even before they liberalize. And obviously, you're seeing on the back of state budget deficits a lot of enthusiastic political pressure to liberalize iGaming. So I think you're going to see the ball and momentum move towards the leaders in iGaming, because sportsbook is really just kind of a warm-up, I think, in a lot of ways for online casino where the real money's made long term.
Awesome. Yeah, you actually hit on my next question as well. So talking about states. So we've seen huge numbers put up from New Jersey, Pennsylvania, and now Illinois, one of the newer states. So yeah, budget deficits, New York was the recent one where kind of highlighted that sports betting could be on the docket. So what do you see kind of as the overall going into 2021 theme of more states legalizing? Do you think the strong results is just going to be the overall key catalyst to getting more to legalize here?
Yeah, I think it's multifactorial. Obviously, believe it or not, shelter in place has been a tailwind for all gaming, from social casino to sports to iGaming. But I think legalization and liberalization is getting a big shot in the arm, right? So you're going to see a lot of states that were planning to legalize anyway in the next 2 years just move faster at it. And they'll move faster on both the sportsbook side and the casino side. So, look, we have a commanding lead as it stands, and we're also getting to new markets faster than our competitors are. It's one of the things we pride ourselves on at Rush Street is new market entry. So I expect to see really strong momentum from this company. I mean, we'll update guidance for next year on the Q4 results in February. But if you look at our progress, not only in Q3 this year, but also the fact that we updated last week that we'd be at the upper end of our guidance range for 2020. Obviously, you can see the kind of operating momentum coming out of the Rush Street team, the kind of profitable unit economics that casino drives. This is a company that hasn't burnt a lot of cash to get to IPO. Is actually profitable in 2020 already, and though we'll spend more money as markets open up next year and beyond, I think it's a company that understands the value of the dollar, has a high focus on ROIC as a metric of fundamental long-term sustainable success, and we're really excited to capture not only the existing markets we have, but also recognize that player psychology and the female online gamer is integral to success. I mean, at least half of the people that are playing online casino and iGaming in the social casino and the regulated space are women, and it's something that Rush Street has been really keen to build local brands around and make sure that we differentiate our playing experience for this wonderful half of the market.
Awesome. So Rush Street has access to several of the large states that have legalized. So Michigan is one, and they are expected to roll out online gaming soon. What do you kind of see for the overall Michigan market? It's one of the larger populated states. It's where Benzinga is based out of. It's where I live. So we're excited to see the growth here in Michigan. But what are your thoughts about, that state with the large population coming online?
Oh, integral to our plans for next year. I mean, we are ready to go the day that is liberal, as has been the case in practically every market. So I think we're one of only 3 or 4 operators that have licenses in the 4 states that we think are going to really matter, including New York in the next year or two, and Michigan is one of those also. So you hit on the head. It's a big population. I think that next year will be, blockbuster results for the state. It'll be good for the local economy. It'll be good for the government, obviously. And we think we're going to see, the same kind of enthusiastic uptake that we've seen in every other state that we've been in. So we are counting the days as it seems you are at Benzinga, my friend.
So along with those states that you do have the deals in place, I know you probably can't talk specifics, but is there plans, to grow through partnerships to get entry into other states going forward?
Yeah, absolutely. So, I mean, Neil Bloom is the founder of our business and chairman. He has been a leading developer of regional casinos. We have had, obviously, the benefits of his regulatory and land-based heritage. But we've been leading even in states where we don't have a Neil Bloom, physical Rush Street casino. So it really speaks to our better mousetrap, to be honest. We think that we have the best product in the marketplace. I've always found that, game companies win by having the best product, not by spending the most marketing dollars. It really is about, capturing players' imaginations, differentiating the player experience from the first time deposit through into retaining them, converting them, and what we call the elder game experience later on. And that's really where we've been masters, I think, at Rush Street. And it's because a lot of the team that built our tech stack used to be in the social casino space, 8, 9, 10 years ago, before liberalization was even really plausibly being talked about in the U.S. And if you can learn to compete as GLUU Mobile does in a market where there are thousands of competitors, you certainly have an advantage in states where there's only a handful of other players, right? And some of the states that we're going to be, entering or liberalizing with only have 4 or 5, skins going out. At most, I think Colorado might have 20, but whether it's 4 or 20 in any given state, it's a heck of a lot fewer than the thousands, tens of thousands of developers you compete with in the social casino space, where a lot of the Rush Street team cut their teeth back in the day. So feeling very, very confident about our sustainable competitive lead here.
Awesome. So I want to turn international for a moment. So Rush Street also has operations in Colombia. Can you talk a little bit about that market and kind of the overall international business?
Yeah. No, that's a great point. I mean, it's another state, a nation state in this case, where we're number 3 in Colombia. Even though we don't have a local casino, we weren't first. We've grown our market share position there through the blocking and tackling of being excellent in what we do, providing a compelling, differentiated experience, even in another language. So, I think we expect Latin America to be a meaningful growth driver for us in the coming years. It's not a greater priority for us than obviously U.S. States expansion, but we think it's a meaningful advantage for us that we have the groundwork there for adding additional, countries. And beyond Latin America, of course, we've got the DNA for global expansion. But, to be clear, I do think the unit economics and the profitability opportunity in the U.S. is probably, surmounts anything we might see internationally for the next, 3 to 5 years.
All right, just want to jump in here. So one of the things that I've been looking at is, I'm big into looking at kind of revenue multiples, and everyone's been looking at the big DraftKings and different kind of stocks that have come out, and you guys are really trading at a fraction of that revenue multiple to DKNG.
Sure.
You guys are going to be growing at twice the rate of DKNG and GNOG, and half the revenue of DKNG and more than twice of that of GNOG. And what I'm really focusing on is that you guys are going to be in that positive cash flow. So how do you think this gives you guys a competitive advantage in the space, and how it really just looks attractive?
Yeah, we agree, obviously. Look, Neil Bloom, I think, is Illinois' third wealthiest captain of industry, and he's been very successful the last 50 years, building a number of multi-billion-dollar businesses, real estate, casinos, and development, now online casinos. So he's here for the long term, right? Our business, quite uniquely, is owned 68% or more. It's actually majority controlled by Neil Bloom, the other co-founders, Richard Schwartz and Greg Carlin. And they haven't really sold down much of anything in the SPAC IPO transaction. So almost all of our cash is going on the balance sheet for growth. They're taking a very long-term view because they believe they can build a $10 billion plus market cap business here. And they are, as I said earlier on, they're focused on ROIC, and they know the value of a dollar. So we will increase marketing spend next year. We won't be more profitable probably next year, depending on how states liberalize and how operating momentum works out. But we are guiding to meaningful investments with the growth capital and marketing investments and growth. But as you rightly point out, we have the best unit economics. So, our payback on marketing spend is months, not years. There are competitors, some of whom you've mentioned, that don't pay back on their spend for years. We're not going to be spending more marketing dollars in any given quarter or year, for that matter, than we have in revenue. That's not the philosophy of Neil Bloom, Greg Carlin, and Richard Schwartz, the Rush Street team, and it's something we applaud at DMY Technology. We think this is the way to build a sustainable winning business for the long term. We think that you have to always run this as a real sustainable business. Otherwise, eventually the market, catches wind and won't be happy with what happens if you have to start cutting back your marketing dollars to be profitable. We won't have to do that, right? We can take a longer term view on marketing payback and grow the top line even faster than where we would be if we were taking a multi-year payback period view on marketing, and now we'd start cutting it back to try and get the bottom line to head closer to break even, right? So I think it's a real enduring advantage, and I think you're spot on, Mitch, and pointing that out. We traded a discount, but really we should be trading at a premium because we have better growth. We've got better unit economics, we've got better bottom line, we've got better return on marketing spend, and we have a leadership position in a market, online casino, that is double the size of the sports betting business.
Yeah, last thing I have here is to notice is one thing I notice also is that you guys don't use that business to business provider, like let's say reaching out to GAN. You guys have your own technology, right?
Yeah, so we do partner with some people in the value chain, but we control more of it at Rush Street than anybody else. So we have not had to acquire anything to get control of being able to iterate the product that consumers get in their hands. And we believe that gives us a margin advantage, and it gives us obviously a control and a time to market advantage. So we still need data, for our sportsbook business, but on the casino side, as our team, our managers always like to say, everyone can get similar slot games. The question is, what is the consumer experience that wraps around that? How does the bonus bank, system work? How do redemptions and payouts work? And we're very transparent and really very unique about how quickly you can redeem cash, as well as how our elder game system works for more loyal users. And I think the other thing I'd point out, Chris and Mitch, is we don't over bonus at Rush Street. So if you look at our market share in casino, we're number one overall in GGR, gross gaming revenue. But actually we're focused on net gaming revenue, where our market share lead is even bigger. If you look at NGR, which strips out bonusing, free play, we have an even bigger lead because we don't need to over bonus to get people to play our casino. And I think that's a really important point for your viewers, is that at the end of the day, I like to always say, GGR is vanity, NGR is sanity, right? And I think that really is all you need to know about the casino space.
Hey, I can tell you as a person that plays in both spaces, the bonuses definitely play a role. So, I think that's a very important point that you pointed out there. All right, so let's go ahead and let's get into some of the questions on DMYD here. I know Chris has a couple, so we'll go ahead and get into this.
Awesome.
Yeah, and I see people in the chat ready to go on DMYD. So this is one we've talked about on the show recently. Love this deal here. So want to dive in and find some more. So Genius Sports is a data provider to the major sports betting companies. I'm wondering if you can talk a little bit about some of the exclusive deals that Genius Sports has in this space.
Yeah, I mean, look, let me just say a couple words on Genius broadly, and I'll wrap that in if that's okay, Chris. I mean, we are the pioneer of both live sports betting as well as official rights. And so Mark Locke, our CEO, has been doing this 15 years. He's built this business from kind of his bedroom, I think, as he used to say it 15 years ago. And we're really proud of the fact that it's the highest quality of the data providers in the space. We think we are growing fastest once again, and we have the highest return on invested capital. So, Rush Street was built on $50 million of invested capital. DMYD, Genius is built on only $40 million of invested capital, which is really an impressive performance for any entrepreneur. I think that entrepreneurs that can get further on less money know something about the space their competitors don't know. And that something is really about the importance of software, the importance of data integrity, as well as the importance of official rights. So Genius believes that sports leagues own their data, own their rights. We have contracts with 250,000 sets of sporting events who all believe in official rights. We have exclusive arrangements with people like the English Premier League, the #1 most bet sporting league and activity in the world. And we also, of course, have exclusive deals with players in the US like the NCAA. But believe it or not, exclusivity, whilst it's important, it's not the most important thing. We actually think the most important thing is official rights that are sanctioned by the league, not data that is obviously stolen or illicitly captured by so-called scouts in stadium. And we think the quality of our software gives us an enduring advantage to be able to wrap that data and pass it on to our sportsbook operators around the world. So Genius is growing really rapidly. You can see in our prospectus, or rather our PIPE Roadshow document we filed with the SEC, that we were growing even 25% year on year in the middle of COVID in Q2 when there weren't a lot of sports in the US operating. And that speaks to the breadth of our rights offering as well as how integral we are to sportsbook operators. I believe that Genius Sports is actually listed as a risk factor in the DraftKings prospectus because they can't really operate without us. So, as Warren Buffett likes to say, like, if you only get a certain number of silver bullets to invest, you got to pick the businesses with the biggest barriers to entry, the most sustainable, predictable growth. And I think Genius Sports checks all the boxes there. If you close your eyes and come back in 3, 5, 7, 10 years, this is literally the picks and shovel data play, toll booth operator of the whole global sportsbook betting business. It's a company that was growing quickly even before the U.S. started to liberalize, which is why the private equity firm Apax bought a controlling stake 2 or 3 years ago. And they remain a big shareholder, but our CEO at Genius, Mark Locke, he's not selling down. He hasn't sold in the SPAC IPO. He's here to build a $10 billion plus big long-term business. And I believe he's on track to do that in grand style.
Awesome. So yeah, you hit on picks and shovel. That was going to be the next thing I was going to say. So, and we do have our CEO of Benzinga watching as well. So one of the phrases he uses here for picks and shovel is the thing behind the thing. So that's what I'd like to say here. So Genius Sports, yeah. So deals in place with some of the larger sports betting companies. So you pointed out, yeah, that in their prospectus, that they need that technology. So this is a great growing space that we like here. I want to turn to competition a little bit here. So Sport Radar looks like main competitor. So valued at $2.8 billion, their last funding round. They have been kind of rumored for a SPAC or an IPO deal. Do you see them going public being a catalyst as they may get a higher premium when you guys really have more market share than them?
Well, I mean, look, it depends how you cut market share. I think what matters ultimately is growth rate and sustainability of the lead. So we think we might be a little smaller in market share, but we're growing faster. We're more public company ready because we're leading in the notion of official rights and leagues controlling and owning their data. We're also a business which doesn't don't do business in the black market or in the dark gray market. So Genius could have a lot more EBITDA if we sold, to Caribbean operators and that kind of thing. And so I think that there is room for two. And I agree that, we are trailblazing here. And I think that we will ultimately, stand a good chance of benefiting from that. But no doubt that, more attention in the space sometime next year be a helpful catalyst here. Ultimately, what I think is calling about Genius and Radar to some extent is, look, we're the only public market play right now. And I bet we'll be the only public market play for another 3 months, if not 6 or 9 or 12 months. And so the reality is we're the only way you can get exposure to the space. And I believe that we also are the player that is poised to benefit most from continued U.S. liberalization because we have the better software business. Okay, so we're really focused on the tech and technology that leagues need to be successful in the space. That all having been said, if we're the Bloomberg data provider of the space, Sport Radar is the Reuters, and there's room for more than one person that everybody sort of has to pay as kind of the toll booth operators of the space. But I think the reality is that momentum right now, the visibility right now that we have by being public first is all an advantage. I mean, DraftKings has obviously done great for itself by being the first public legalized sportsbook operator. And I think that we'll achieve the same thing at Genius by being the first, data provider to the sportsbook business worldwide.
Awesome. I want to talk a little bit about recurring revenue. So Genius has 60% recurring revenue in that presentation listed. How important is it to, lock in some of those deals with these sports betting companies for that data going forward?
Yeah, I mean, we have deals with actually hundreds of sportsbook operators. As we've said in our deck, there is, both a fixed and a variable component. What I love about Genius is it's the smartest investment you can make in the sportsbook space, right? Because you make one bet and you win with a Genius investment, regardless of whether FanDuel beats DraftKings or DraftKings beats FanDuel or Rush Street beats them both in sportsbook in any given state or country worldwide. Everybody pays us. And we also have a variable component, so we capture the upside, but with no downside risk, right? So our business grows steadily even without the variable component. But when people have more momentum and they have a good quarter, we capture, even more of the upside with a diversified set of SaaS contracts that have a lot of inbuilt growth contractually in the coming years. So it's just really a safe, sustainable, and frankly, winning proposition from an investor perspective on how to play the global sports betting book and marketplace.
All right. So one of the things that I wanted to talk about was Sportscast, and this is one of the things that, we're just going to see increase, the data for these and the different services that are going to be coming out, whether it just be even sports media. I think, definitely Sportscast is something that I'm interested. Tell us a little bit more about that.
Yeah, so this is an acquisition we announced, obviously, a little over a week ago, 8 days ago. It is the first of many smaller, acqui-hires and eventually meaningful acquisitions that Genius would like to make and has a pipeline around. It's in fact one of the reasons why Genius is going public now and wants the added growth capital we bring, is that they see an opportunity to accelerate growth. So they believe that not only in the US, but worldwide, there are pieces of IP, there's pieces of teams, a piece of technology where 1 + 1 can equal not just 3, but like 10, right? So we can really turbocharge our overall operating model and value add for sportsbook operators, not only through our continued organic pipeline of R&D projects and investments in things like streaming, but also through incremental services that we can sell. So we think this is priced well. It's valuable to all our existing clients. It'll help us capture, some new clients. And Mark Locke, our CEO, was on the ground, obviously, in Florida last week as we announced that and wrapped that up. And he's been very excited about that transaction for, the entire time I've known him, I think. So it's an exciting, little deal, but valuable deal. And it really points towards all the vectors of growth that Genius has. If you look at the new investor presentation we filed last Monday. We have a bridge from 2020 to 2022 and showing you kind of all the constituent components of growth. This is just one of 4 or 5 vectors that really allow us to predictably but powerfully grow the business in the next 3 to 5 years. So you should watch this space. There'll be more similar type moves, once we're public.
Yeah, one thing that I noticed was, and I thought this was really interesting, is that 60% of the revenue is reoccurring. And also the top 10 customers only make up 30% of that revenue. I think that shows some good, diversification there in your customers. And also that reoccurring, I mean, we always love reoccurring revenue, right?
No, exactly right. I mean, this is what I love about Genius is it's diversified in sportsbook operators. It's also diversified in the sporting events themselves. So, I think, the number one most bet upon, league in the world is the English Premier League. I believe that if you look at leading sportsbook operators, you'll find that something like 7%, 5 to 7% of their handle is coming around the EPL, which has, maybe a couple hundred games a year, that order of magnitude. It comprises only about 3 or 4% of the total sporting book data rights that someone like a Genius has. So it's really quite impressive the amount of diversification they have on both sides of the equation. So they have, might even be less than, might be 2% actually of their rights and 5% of revenue, and that's the number one most bet upon sport. So everything else is a lower fraction of revenue than the EPL. And so you can see that this is really a global diversified data business and sportsbook business, right? 90 to 95% of revenue is not coming from the EPL, right? And even less of the data is, right? So, people forget that sports are a localized affair. It's the same with all content, in my opinion. There are sports in every country that are unique to that country. And people like to, wager and engage with them locally. And so I think Genius has an amazing mousetrap, an amazing software business. It's an incredible business they've built. It's very capital efficient. And it's playing, already well to investors. Although I think that as people understand it, increasingly in the coming months, they'll get ever more excited about the fact that this is a one-stop shop investment on truly global sportsbook betting, from India to Europe to the US to Latin America. And it's hard to see how this is not, a fantastic winner in the next, 3, 5, 7, 10 years, just buying and holding.
All right. I know Chris has a couple more. So before we wrap it up, like always, guys, if you guys are getting value out of this, smash the like below, hit the subscribe. We do this every single day at 11. Let's go ahead and just wrap it up, Chris. What are the last kind of questions we got here?
Yeah, so I want to ask about, DMY Technology has a third SPAC that's still trading as units. So DMYIU. So it looks like going after consumer apps. Can you talk a little bit about some of the target areas that this SPAC's going to focus on?
Yeah, so we have a similar prospectus for all 3 of our SPACs. What we added for DMYI is that not only are we looking at consumer apps as we have for the first 2 SPACs, but we're also looking at the technologies that underpin the future of the mobile ecosystem, right? So things like machine learning, AI, next generation cloud computing, potentially even things like quantum computing, they're all in the mix. My partner is actually Harry Yu in DMY Technology, who's our chairman. And Harry is the former CFO of Oracle, the former CFO of Accenture, and effectively ran the chairman's office at EMC, where he's consummated, over 100 acquisitions of that company alone, and obviously sold the business to Dell and spun off the tracking stock in VMware as part of that. So Harry's got deep expertise in SaaS, deep expertise in next generation computing, and he and I make a fabulous, highly complementary team. So we're really focused on probably doing something in deeper tech on DMY DMY3. We're not going to be competing with either Rush Street in the B2C casino space or in the sportsbook data space like Genius.
Awesome. And then while we have you on and before we get to any possible viewer questions here, You are the chairman of GLUU Mobile, obviously not a SPAC, but we do talk gaming companies a lot on here. So I'm wondering if you have anything to kind of share with us, just the overall, outlook and picture for GLUU Mobile right now, with mobile games growing so fast, in part due to the pandemic.
Yeah, absolutely. I mean, look, I'm very proud of what my successor, Nick Earl, has done with the business in the last 3.5, 4 years. There has been a roadmap of growth that when I was a CEO for 7 years, I feel like we laid out. We made some great acquisitions. It was the inspiration in a lot of ways of me becoming a SPAC sponsor, as I noted that I can add a lot of value as I have as chairman of GLUU by helping with governance, helping with acquisitions and strategy. But there's often people that are better CEOs than I of the operating business. And so, GLUU Mobile is, I think, it's doubled, if not tripled bookings while I've been chairman and Nick's been the CEO. It has integrated all the acquisitions that I made previously exceptionally well and led them all to growth. And it's launched some new great franchises as well. So we're the leader at GLUU in the baseball business, as well as in a lot of female-centric and female demographic-led games like Covet Fashion Design Home. We raised a secondary GLUU in Q2. So I have seen a lot of the same investors that I have for my SPACs and my D-SPACs and PIPEs on the GLUU fundraise also. And so we've got a war chest at GLUU. Acquisition-led growth is a possibility at a grander scale than it ever has been before. But it's also a company that has tremendous operating momentum, right? So you're right, shelter in place has been kind to both Rush Street, Genius, and GLUU Mobile. And I expect the momentum will carry forward tremendously next year. You've seen GLUU Mobile increase guidance repeatedly this year. And we're on track to have the biggest year in our 13, 14 years as a public company and nearly 20 years in operation, believe it or not. I've been involved with the company 11 years. And when I started at GLUU, this was a barely $60 million revenue business, running out of cash in 9 months. Today this is a company with $1.5 billion market cap, doing approximately $600 million of revenue, and double-digit EBITDA margins with well over $300 million of cash on the balance sheet. So it's really been a tremendous achievement. In a lot of ways, kind of my career, life's work, if you will. But I think you should watch this space because there are great things in store for GLUU in the coming weeks, quarters, months, and years also. So we appreciate your support and your audience tuning in to follow GLUU as well as DMYT and DMYD and DMYI once we announce something.
Awesome. So I know we're running a little long here. We will just do one viewer question I saw here from King Donnelly. So they asked, what trends are you seeing in customer acquisition cost and lifetime customer value? Yeah,
so that's a different question depending on which company we're talking about. At GLUU Mobile, obviously there was not a lot of ad competition during shelter in place in Q2 and Q3 when travel companies all stopped advertising. But game companies have stepped into the breach, and I think CPIs are back to where they were, even though LTVs and ARPDAU is maintaining an elevated level, which is helpful. Rush Street is seeing something similar. So, you're seeing payback on marketing spend at both GLUU and Rush Street driven by the quality of the product and the quality of the team. And I think we've got a fabulous product team at GLUU and Rush Street, bar none. So payback at Rush Street, I think, is the quickest of any gaming company I've been involved in. It's single digit months, whereas at GLUU, sometimes we'll spend out to the 1 year LTV and maybe even beyond. And some of our competitors, I think, in the sportsbook business spend out to the 2 year, maybe even 3 year LTV, I've heard in some cases. And so I think what's going to happen is obviously Apple's going to change advertising and privacy policies next year in the first half of the year. I mean, rumored to be, probably late Q1, early Q2. Facebook has obviously started advertising, I think vociferously against this for understandable reasons. That will change the landscape, but I think the big companies, the GLUUs, the Rush Streets, will continue to have a data advantage and continue to have a payback on marketing spend advantage. Ultimately, the ecosystem will stabilize again once the Apple's new policies have fully propagated. But in general, what I always focus on in the gaming space is the product, not how much someone spends on marketing. Because if you spend a lot less per unit, per user than you have in lifetime value, you're going to be a great game company, lots of room to grow, lots of room to spend, lots of room to be profitable. If you spend the same amount or more as your LTV, you're not doing something sustainable, and eventually the public markets will catch up, wisen up to that, and probably punish you vis-a-vis stock price performance. But that's a great question, and what Rush Street does is we focus on local markets, local personalities, where we can really have an advantage in the demographic fit. And GLUU, borrows from similar notions both nationwide and locally. Plus, it has things like my Kardashian game, where we've got some influence or power associated with that.
All right. Seems
All
like
right, Chris. And maybe any other questions?
I think that's it for today. We want to thank you for coming on the show. I know we talked about a lot, covered those exciting SPACs. We'd love to have you back on the show in the future. We're looking forward to hearing, when DMYI is announced as well. So we appreciate your time today and look forward to following the progress of each of these names going forward.
Anytime. Great to be here. Happy holidays, gentlemen. And thank you, everyone, for watching. See you again.
Appreciate it.
Thank you.
All right, guys. So, yeah, you guys heard it here first, guys. This is the best SPAC show out there right now. There isn't really anybody out there really covering like we are. And we're going to continue doing this. So, like always, hit the subscribe and the bell down below. And like always, guys, one of the things that we want to do is do the stocks that you guys want to see. So, tomorrow is going to be all about ticker time. So, show up tomorrow. Let's go through tickers. We're going to be running through tickers left and right, whether that be technically, story, fundamentally. And that's what we do here, guys. So definitely put in the comments below if there's any SPAC that you want to see some more coverage on. And like always, guys, smash that like button. Is there anything else you want to leave off with, Chris?
No, that's it. 2 great interviews this week, and tomorrow all about those tickers. So drop your tickers in the chat today, or show up tomorrow and drop those tickers in, and let's get some new names covered.
Yeah, one of the things I'll definitely be looking forward to is how gambling increases in the next year in 2021, and whether there'll be new SPACs in this area. I definitely think you're going to see some kind of advancement, whether it be these stocks right here or some new ones that come out. So definitely stay up with this industry. It's an industry that I'm very active on. As you know, I do a little sports gambling on the side and try to make my jerseys for free. So we'll definitely see this industry as it continues to grow. All right, guys, that's going to be it for us today. Like always, guys, let everyone know the best SPAC show in the world is right here on Benzinga. And like always, guys, check out your free 2-week of Benzinga Pro, guys. If you want to start being with the real-time news alerts, you want to be on the catalyst, check out Benzinga Pro. You don't even need a credit card to check it out. 2-week trial in the description below. And we'll see you next time, guys.